Calgary real estate market has had quite the run over the last number of months. It's December, there's no snow. The big blue ring turns 10 years old. I mean, do we even know what that blue ring is called? Blue ring. Christmas markets are over. I mean, how is that even a thing? We just got into December.
Hey, you're a mean one, mister.
We're walking into a busy season, but is it going to be busy for real estate over the next 4, 6, 8 weeks? Well, let's jump in the numbers. Let's see what's happening right now in Calgary. So in December, we saw some pretty interesting numbers come about, especially because we are still seeing kind of a hot market. There's a lot of new listings that have come on the market. Over the last month, we saw a 40% increase in the actual number of new listings compared to last year, but it was an ultra low time last year too. But we still had a low number of inventory. We still saw prices slightly increase for the most part across all property types. And what you can see in this chart right here is that the gap from inventory to sales really didn't widen very much more. If we're walking into a market that's shifting, that's changing in terms of it not being hot, meaning it's slowing down, it's more buyers focused, we would end up seeing a lot more inventory staying on the market, but that's just simply not the case. And when you look at the actual sales by price range across all product types in Calgary, you can notice between 600 to $1 million, the strong increase in all these different product types and how many sales have happened November over November for the last 4 years. All this is saying is that we are seeing a shift in prices moving upwards, and frankly, there really is a lot more inventory when you start looking at 700 or $1 million and up, because the months of supply, what it's saying is anything between 700 to $1 million is probably about 2.3, 2.4. As soon as you hit a 2.5 month of supply type number, that's when you get into a balanced market where it's kind of good for buyers and sellers. When you get 4 months and over, that means it's very much strongly in the favor of the buyer, and anything under 2.5 is a seller's market, which we've been in for a long time. And every other price range below 700,000 is sitting in that seller's market. And when we look at the whole city with the months of inventory, we are looking at ever since May, when we saw our lowest number right at 1 month of inventory, up till now, we've been seeing a slight increase, and it's been very, very small. We're sitting at roughly, I think 1.67, I think it is right now. But when we're at 1.67, really, that's still a very, very strong seller's market. We went from 1 month to 1.6 months. I mean, that's literally only a difference of 2.5, 3 weeks of inventory sitting on the market. When we look at all property types and the months of inventory that are happening there, we're seeing kind of the same thing as well. Generally speaking, across all the different price ranges, generally across the whole thing, they're all saying we're in a seller's market. However, when we get into the different property types and the different price ranges, which we'll get into later in the video, you're actually gonna see a little bit of a different trend happening. Some of these higher price ranges are actually seeing more inventory and more opportunities because some of them are actually sitting in a buyer's market, but I'll get to that soon. And when we look at the total number of sales across the city for the month of November, we saw a decrease from last month. Now, as you can see in this chart, that is very normal. We always see some type of decrease as we head into this time of year, except actually in 2021. You can actually see it went up. We were going into that Christmas nice and strong. But over the last 10 years, we still had a high number of sales other than 2021. But what does this mean? So when you actually look at the number of new listings, we also see a decrease in new listings typically at this time this year. But this year, we actually saw the highest number of new listings come on our market since the last 10 years or so, which should mean that if the number of sales aren't there, then we should actually start gaining inventory, which would then slow down price growth, which would, have a bigger impact into 2024. But the reality is we still had so many sales that our inventory levels are still the lowest that we've seen in 10 years or so for November. And that is really the story of this year. Low inventory, high demand, and continued increase in prices. So if you're finding this data helpful and you like this type of information, we have a lot more of it in more detail. In the description, you'll find a PDF guide that you can go and download our monthly market report. It's got current information for all the different sub-communities like Airdrie, Cochrane, all those cities around the city, as well as Calgary's information as well. So go ahead and download that. Tomorrow on December 6th, which already happened for you because this video has come out on December, 8th, 9th, 11th, December 11th, you already know the answer to what I'm going to talk about, but I don't know the answer because tomorrow on December 6th is when Bank of Canada is going to talk about their interest rates. And my prediction is that they're probably not going to drop them right now. But Adam, was I right?
You're right, looks like your prediction was correct. Bank of Canada did not hike their interest rate. However, they didn't drop the interest rate either, so they are staying paused. That's the third consecutive pause. Just more evidence that the Bank of Canada is satisfied with the input that these higher interest rates are having in the economy. The interest rate pressure is doing what the Bank of Canada wants it to do so that we can see some of that excess demand in the market move out, and that'll set the stage for some rate decreases. And we may see anywhere from 1% to 2% of rate drops by the end of 2024, which is pretty exciting for buyers for sure, and anyone with a mortgage now. Take care.
Well, thanks, Adam. And whether I was right or wrong, regardless, when interest rates are starting to drop, which they will if they didn't happen this week, it most likely will happen in the spring, maybe around March, we're gonna see the market change again. We're gonna see things take off again. And we wanna shoot some videos and some content about what to do and how to prepare for it. So I need your help. I need you to put comments on this video with questions about your particular situation and how we can help you prepare for this change coming up, because we want to answer those questions. So please make those comments so we can help you out. But let's talk about detached properties first, because detached properties have been flirting. They're the flirtiest of the flirtiest, and they've been flirting with the 700,000 benchmark price range for 4 months in a row now. We've been sitting within a $5,000 gap, $696,000 for a long time, and this month it ended at $699,000. I don't know what to say, but detached homes, they're gonna go into the 700s, maybe next month, 2 months, 3 months. Regardless, we're going in that direction. That's what's happening. And detached homes also saw an 18% increase in new listings coming on the market compared to November 2022, but we're still down in terms of inventory. So much so that we're actually down 10% from last year and 9% from last month. That is a big drop in detached homes. And what we see in the price ranges is everything that was 2 years ago or so, the gray bars right here, that was in the 400 to 600,000 price range. That has really adjusted, and now you can see how many more sales are happening in higher price ranges. And it just goes to show that prices are going up. I mean, it's just an easy way to see that. But some of the increases that you can see right here compared to last year and right here compared to last year, that's all between 600 and $1 million, where we did see, actually, this is a pretty big jump over $1 million here, because you had about, let's call it 50, 45 places that sold last year, where maybe it's about 85 or so this year that sold over $1 million. That's a pretty big jump. So there are a lot of sales that are happening, but if you are looking in the $1 million price range for a detached home, you will be glad to hear you're in a buyer's market. So you are. If that's the case, anything under $1 million, it's still, for the most part, sitting in a seller's market where the seller has the upper hand. But if you plan on buying something and you're looking over the Christmas holidays, you're coming to visit family, you're trying to decide if you want to do this and you're going to pull the trigger between now and maybe February, there's a really good chance you aren't going to have competition. You are going to be able to maybe even have conditions. You'll be able to negotiate. Shocking. There's a lot of things you're going to be able to do if you're looking 900, $1 million and up for a detached home right now. So, semi-detached properties. You got to remember, this is a combination of your high-end infills as well as your older half duplexes and everything else in between. Well, not really, because there's nothing else in between. It's just these two types of products typically that are attached, and that's what's in semi-detached. Over the last year, we saw a dramatic increase, 38% new listings come on the market compared to this time last year. That is a huge jump in terms of how many new properties came on. But we only saw a 5% decrease in inventory levels over the same time. So that means stuff is getting eaten up. Properties are being purchased, and property prices actually pretty much stayed the same as they did last year, last month. $628,700 was the price that we had this month for benchmark price, and it was the same last month. Is that called stability? No, I think that's just called the market, just doing what it's doing. But it's not gonna be really moving high or low in either way. It's just kind of is what it is. But when you start looking at the price ranges, sales by price ranges, look at this drastic change right here between the $300,000 to $400,000 price range, where this time last year, we had about 55 sales that happened in the 300,000 price range, and now there was 9. That is a massive drop. So what that says is that the half duplex property type has jumped in value and has moved into the $400,000, maybe even $500,000 price range, where before it might have been $380,000, $390,000, $360,000, something like that. But now you're kind of seeing some $450,000s, $440,000s, maybe even $510,000s for stuff that's been renovated. And that clearly is indicated in the numbers here, in the number of sales. And when you look over 700,000, well, that's just straight up some of the new stuff, right? The new infill type property that's in the city. And as you can see, anything over $1 million, you are in a very, 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 very strong buyer's market. But frankly, there's only 9 sales last month. So you're in a strong buyer's market, but there's not a lot out there right now for semi-detached properties. And everything else is at essentially 2 months or less for any type of inventory under $1 million. So expect to, if you're looking for that half duplex, if you're looking at attached properties, expect to have potential multiple offers still. There might be less urgency in the market, but the reality is you still need to prepare yourself to know how to fight when it comes to fighting when you're writing that offer. And make sure you're tied with the right team too, the right agents, the right mortgage brokers. All those things make a big difference in you winning or losing the home that you want to get. As we kind of close off the year of the townhouse, because I still think this was the year of the townhouse, one little thing you can notice right in this chart is this little blue line right there. This is the first time we've actually seen there be more inventory than sales on a chart, I don't know, since probably January. So that's a long time. That means a lot of properties have been selling, and it clearly is seen in your price increase right there. And so the reality is we saw a 21% increase in the benchmark prices over 2022 and a 40% increase in new listings over the last year as well. With that type of number of increase in new listings, that says one thing to me. A lot of sellers being very confident that they can sell their townhome right now, and they're right. You should be right, because there's a lot of people who are looking for this property type. And truthfully, we've only seen a 7% increase in inventory. So with that type of number, nearly 50% more inventory or no more new listings coming to the market, we should see more inventory sitting, but we're not. Things are still selling. So much so that between the $400,000 to $500,000 price range, we actually saw it go from maybe 50, let's call it 55 sales last year in 2022 to nearly 100 sales the same month this year compared to last year. That is a massive jump, a huge jump. And I mean, that's actually what the price was last year. Actually, if you look at this chart, you look at this green line, you can see that in the $300,000 to $400,000 price range, we did see 100 sales last year. But this year is when we saw that. So prices jumping up. But when you look at the actual supply, so what type of market are we sitting in, if you've got a townhome that is over $500,000 on this side of this chart, expect to sit. You're not gonna see a lot of probably buyers coming through the door. You're not gonna see multiple offers because you are sitting, starting at 500,000, you're actually sitting in a buyer's market. That's the reality. So a villa, attached villa type property that could be going for 650, 700, 500, something like that, that is a different type of townhome, but considered a townhome under this category, you are technically in a buyer's market right now, which is kind of hard to understand because everything should be moving quickly, but that's the reality. If it's under $500,000, look how that changes so drastically. You go down to probably, it's like 1.3 is my guess, 1.3 months of inventory compared to over 4 months of inventory. That's a big jump between over 500 and under 500 for townhouses. So condo apartments. I mean, this has kind of been a hot topic for a while because condo apartments have typically not been a great investment. And we're seeing that change now as the demand for condo apartments kind of increase because of the price point that they offer and the types of buyers that are moving here who are totally open to buying a condo. So what we see when we're looking at this is that condos actually saw an 18% increase in benchmark price over last year in 2022, which is kind of on par with what we've seen with a lot of the other markets. So what we did see is a 25% increase in sales, which is a pretty big jump considering that we only saw a 7% drop in inventory. So we've had more stuff come on the market, more sales happen, and our inventory is dropping. But it's not dropping too quickly, which is a good thing. 7% drop over last year, it's still a lot less. But there was a lot of condos for sale in years past. So that's a good thing. But all of this data, what it points to is prices increasing in the future. So when we look at the sales by price range when it comes to apartment condos, look at this increase, the sheer number of sales in the $200,000 to $300,000 price range. This time 4 years ago in 2020, I mean it was 2020, there was about 80 sales or so. And then 2021 we saw maybe 115 or so. 2022 almost broke 200, and now this year we actually broke 250, probably about 260 or so sales that happened in 1 month in one price range in the 200s for condo apartments, as well as in the 300 range. The same thing happened here, as you can see the number of sales that are happening. So when I said before we had a lot of products for sale, just not a lot of stuff selling, we still have a decent amount of products for sale, but now they're actually selling with new stuff coming to the market. And one thing to note is as prices increase, we're gonna start seeing more of this happening. Right here in the 400 to 500 range, there was only maybe, I don't know, you can see the last 2 years, it was probably around 20 to 25 sales that happened in those 2 years, the last 2 years, each month. But this month, it almost broke 50. So what's happening is as prices increase, or as people have a higher priced condo that they're selling, more buyers are willing to spend that type of money to purchase a condo apartment for the $400,000 price range, which kind of is probably the way that things could be going in the future. Not saying everything's gonna go in that range, but prices are going up, and that's what that means. And as we look at actual months of supply, months of inventory, if you have a condo that is under $500,000, you are easily, the blue there, in a seller's market. And if you're over $500,000, actually, if you're over 500 but under 600, so just in the 500 range, you're sitting at 5 months of inventory. And ironically enough, if you're sitting between 600 to 700, it's weird, but it's actually probably flirting with that buyer's market again. And then as soon as you get over 700, you're 10 months plus inventory, right? So there's kind of this weird little pocket for apartments right between $600,000 to $700,000 where whether it's just not a lot of inventory, I mean, really, there's basically no sales when you look here, but it is kind of an interesting little number here, a little bit of a gap. It's kind of weird. But at the end of the day, you're in a seller's market if you're buying a condo that is under $500,000. So hopefully you like this information. Head to the description, download the PDF, and we'll see you on this video.